QuickBooks Pro Desktop 2021. Bank feeds, matching sales receipt. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our bank feeds test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We've been thinking about how to fit the bank feeds into our customer cycle, into our sales cycle. We thought about how the bank feeds can fit into the process of invoicing, the invoicing matching to the bank feeds, or the received payments matching to the bank feeds, or the deposit matching to the bank feeds in prior presentations. Now, let's think about a situation where we have the create sales receipt. So the create sales receipt would be used if we're making the payment at the same point in time, or the payment's being made to us at the same point in time we do the work. Something like a restaurant, for example, will typically be charging the client at the same time that the work was done at that time. So that will typically be an increase then to sales when we record this item. And the other side would then be going to some kind of cash, whether that be the checking account or undeposited funds. Now, oftentimes when we look at this item, we might be receiving some type of payment such as cash. And if we receive like cash, then we're going to have to group that cash together, most likely go to the bank at the end of the day and put it in the bank all as one lump sum. And for that purpose, you'll often need the undeposited funds to do that, to be able to do that grouping process. So we'll take a look at that. However, if you are receiving payments, and say like electronic transfers or checks or something like that, and you expect to put them into the bank account in the same format as they will be seen on the bank statement, then it's possible that you can just simply enter the sales receipt and then wait till it clears the bank, and so that you will see it on the bank feeds side of things and then match the sales receipt to the bank feed. If you were to do that, then there's two ways you can set up the create sales receipt. One is you can deposit it directly into the checking account at the point in time you make the sales receipt. And if you do that, then it would increase the checking account and increase sales at the point in time of the sales receipt. And then you can simply match it out to the bank feeds, and you would just basically be matching. You wouldn't be doing any new recording once you match it out to the bank feeds. You would just match it out at that point. Or you can put it to undeposited funds, and then when you match it out to the bank feeds, it'll take it out of undeposited funds and it'll put it into the checking account. So let's try a couple of those. I'm going to open up the create sales receipt, and I'm going to set up a new customer number 20, let's say, customer 20, add the customer. And now undeposited funds up top, we'll get back to this in a second here, but it's going to be on 6/30, let's say, as of the date. And the item, I'm going to set up a new item. So a new item up top, and I'm going to make this a non-inventory part. So we're not going to be tracking inventory in the system in a perpetual system, but using a periodic system, but we will be charging sales tax for it. And I'm going to call this item number 20. So we'll keep that item 20. Item 20, and I'm going to say that item is 45.94 tax. We will be charging the sales tax, and then the other account that it's going to go to is going to be the sales or income account. So let's set that up. And so there we have it, and we're going to say quantity is going to be 1. So we're going to be charging the sales tax. So there's the sales tax, so the total charge being the 48.24. What's this going to do then? It's going to increase some type of payment, some type of receipt of payment, some type of cash for the total amount of the 48.24, including the sales tax. And that will either go into the checking account or undeposited funds. It'll depend on the settings here. The default settings is undeposited funds. You will not have this drop down at all unless you change the settings to see it. So the settings to do that would be in the edit drop down, preferences, and then the payment preferences, into the company preferences. If this is typically checked off by default, and if it was, you will not see this thing here. If you uncheck it, then you'll see it. So I'm going to close this out. So if this is not there, it will be going into undeposited funds by default. Now you could change it and put it directly into the checking account. If you were to do so, then after you record this transaction and then go to the bank feeds, you would see it clear on the bank feeds, and it would just simply be matching out what has already been recorded in the bank statement. Therefore, there would be no other transaction that would be recorded. You would basically be doing the process of reconciling at that point in time. You'd be kind of helping out your bank reconciliation process at that point in time. If we keep the default setting as we will here, then it'll be recording or increasing undeposited funds. And when we then match it out to the bank feeds, if we were then to wait for it to clear the bank feeds, the bank feed matching process would take it out of undeposited funds, recording a transaction in that case, and putting it into the checking account. So we'll take a look at that. So undeposited funds is going to increase by the full amount, $48.24. Then we also see that sales is going to increase by the amount we charged, $45.94. Difference, $230. It's going to go into the sales tax. So I'm going to say save and close. Let's check it out. So save and close. And then we're going to go to the reports up top, company and financial. Let's take a look at the balance sheet standard. Changing the dates in the customized field up top to 01/01/20 to 12/31/20. Okay. And then we have the undeposited funds now increased by that $48.24. That's the full amount of the invoice. The other side's on the income statement in sales or revenue or income. Reports drop down, company and financial, profit and loss standard, dates from 01/01/20 to 12/31/20. It's going to be in the sales item for the $45.94, not the full amount, not including the sales tax. So $45.94, the difference is going to be going to the sales tax. Closing this out, so this will track your sales tax for you back to the balance sheet up top to the sales tax, and that would be included here in the sales tax. Now, if we were then go back to the home page and say, okay, next step will typically be to make the deposit. But if I just don't want to deposit and I say I'm going to wait till it clears the bank and then match out the bank deposit to the sales receipt, you can do that as long as the matching is the same. If it's just one-to-one matching of sales receipts to what clears the bank, you can do that. If it's not one-to-one matching, as we'll see next time, it'll be a problem. So I'm going to then go back onto the bank feeds, go into the banking drop-down, bank feeds. Let's go to the bank center. Now I'm going to be in the reconciling items because there's a rule based on it. Typically you would be in the uncategorized item, but I'm going to look for this deposit here. We're looking for the 48. Now if it wasn't already applied out with a rule, then you would probably find the amount already. It would already be matched, is what I'm trying to say. It would already match it, but because it had a rule, it didn't match it out. It didn't see the amount and be able to match it out. So here's the one, the 48.24. And so I can say that. I'm going to go into it and say add more details. And then we can use the matching feature over here and say, let's check them all out. And there's the 48.24. And if it's a one-to-one match, then it's matching out the sales receipt right there. And it should work. You should be able to match that out, and then it'll take it out of undeposited funds and put it into the checking account through this matching process. And again, if it wasn't already applied out with a rule, then the system probably would have seen that and suggested that it might be a match based on simply the amount. So then I'm going to say save and add to the register and say okay. And let's check out what happens. Go into the balance sheet and go into the checking account, and we should see that 48 on what did we say, 6:30. We should see that 48. Actually, the deposit happened on 5:15, so it's a little out of order on the dates, but bear with us on that. So there's the 48.24 that is there, and it went, the other side's going to undeposited funds, closing that out. Undeposited funds has now disappeared because it's back to zero. If you want to look at it, I usually go to the trial balance by going to the reports drop down, accounting and taxes, trial balance, changing the dates from 01/01/20, 12/31/20. And then if you look at the undeposited funds, it's at zero, but we can auto zoom on it, and then we'll see that decrease of the 48.24. So it went up here, dates are backwards, but you could see the process. So there is that. So there's the one way that you can do it. Now the other thing, let's take a look at this again. Let's go back to our home page, and let's add a couple sales receipts here, and think about, well, what would happen if we had a couple different sales receipts. So if I go back into this and I say, all right, let's say we had customer 25, adding a new item, and I'm going to say this happened on, let's say 06/30/20. And then the item is going to be a new item. I'll set up a new service item. And this is going to be just a service item, no sales tax this time. And service, and what did we say? 25. Service 25, 25, good old service 25. It's going to be for 110. It's non-taxable item, and then it's going to be in our service income. So I'm going to say we have that. I'm going to say okay, and then we're going to sell one of those. We'll sell one of those. This will increase then undeposited funds. Other side goes to sales. No sales tax involved. Let's say save and new, and do another one. And I'm going to say, all right, this is customer 26 tab add. We'll do the same date here. And we're going to assume now we're getting cash. This is often the case if we get cash, that we're going to group them together. So, and when we deposit it, so I'm going to say new service item. This is going to be item 26. Let's make it service 26. Service 26. Service 26. And the rate is going to be $10, non-taxable. And the account's going to be a service item. So I'm going to say save. And let's say we have two of those. So that's $20 total. No tax applied. This will increase undeposited funds. Other side go into revenue. And so I'm going to say save and new one more time. And we'll say, okay, this is going to be customer 27. And we're going to say that happens on the same day. And we'll set up another service item, new. And this is going to be service. And this is going to be service 27. Service 27. Copy. Paste. Rate is going to be 110.86. Non-taxable. Account service or service income. And okay. This is going to increase undeposited funds. Other side going to the service income. We're going to say save and close now. Let's check it out. Save and close. Save. I think that's okay. Now I have three items that typically we would go here to record them at this point in time. Let's take a look at the transaction that took place. Balance sheet. We're going to say these three transactions are going into undeposited funds. So undeposited funds have now increased by the 110, the 20, and the 110 for a total of the 240.86 that's currently in there, closing that back out. The other side went to the income statement, profit and loss, increasing the service income by those three amounts. So the service income increased by 26, 27, 25, 26, 27, I think it was. That it increased. Yeah, so let's close that back out. And so now we have that increase there. If I go back to the balance sheet, this undeposited funds needs to then go into the checking account. Now we could say, like, if I go back to the home page, we could say maybe I just want to wait till it clears the bank and then use the bank feeds, which would do the transaction for us. It would take it out of undeposited funds, record it to the checking account. So to do that, though, if we have a problem, though, because it's not going to be grouped together in the same way. It's going to show up on the bank statement at the 240.86, the sum of all three of them. In other words, if I don't use this grouping feature to group those three payments to the total, which is going to be the 240.86, it's going to be difficult for me to match them up. So let's just check that out. So if I go back to the bank feeds without recording that, and I say, okay, and I wanted to look for that item, I'd have to basically find that item. I'm going to say it's going to be one of the Stripe payments. So 240.80, there it is, but I would have to kind of figure it out. Then I'd go back into the drop down. I'd have to say, let's add it probably, and notice the system couldn't find it here. And it wouldn't, and that's because it had a rule, but it wouldn't be able to find this one even if it didn't have a rule, because the numbers wouldn't match out, and you'd have to go down here and do some hunt and search type of thing, and then say, okay, I think that one will match, and then edit, and then go to match, and then I want to look at all of them, and then I can say, oh wait, maybe these three add up to like that amount, and it does, and then you can record it, and if you were to do so, then it would then do the same thing we did before with multiple transactions, decreasing the undeposited funds, recording it to the checking account. But that's a little difficult to do. I mean, you have to kind of search around. This is going to be a lot more time consuming than you would think. So I'm going to close this back out and say, do you want to discard? I'm going to say yes. So what you would want to do then is to then go to the bank at the end of the day and deposit them in the system at the same format as you received in the bank. So in other words, if you imagine you got cash payments for those 3 amounts, you're going to go to the bank and put them into the bank as one lump sum. And so I want to put them into my books as one lump sum when they hit the checking account, which means I'm going to check all 3 of them off and then say, okay, now they're going into the books at one lump sum. This will then increase in the checking account, grouping them together at 240.86, take them out of undeposited funds one at a time. So if I say save and close and say, okay, then I go back to my balance sheet. Now I can go into the balance sheet, look at the detail, and I have that deposit in there at the 230. It should be in there at the 230. I'm sorry, it's at the 240.86. So there's the deposit. If I double click on that, and there's the 3 items that we had, right? And then the other side is going to undeposited funds, which has now disappeared, but we can see the detail on the trial balance. We could see it. This is one way to see the detail. This is what I usually do. Double click the trial balance. And then we saw and this breaks it out by item. So those 3 items that we had, the 110, the 20, and this one, if we double click on any one of them, will take us to the deposit that includes all of them. I'm sorry, this is the other side of it. We want to see the payment side, so the decrease. So these are the 3 decreases for the deposit. If I double click on any one of them, there's the deposit, including the 3 items and then the total. So now if I close this back out and close this back out, and one more note on the balance sheet, if I go back to the balance sheet, double click on the balance sheet, and I look for that 240, this one doesn't have that little thing that says it's been cleared, meaning I haven't matched it using the bank feeds yet, and so it's not reconciled yet. This little thing means it's going to help us to reconcile the bank account at the end of when we do our bank reconciliation process. So I'm going to so note that as we go. So I'm going to go to the bank feeds then, and then if I sort it by the name or the payee, let's sort it by the payee over here, and I'm looking for the Stripe one. Here it is, the 240.86. Now, if I hadn't applied a rule, it would probably match it out. It would see it and say, hey, look, the dollar amount matches, and therefore it would tie it out. But if it doesn't, it's easy for us to match it up because we go to more detail. And then I can go to the matching, and then I'm going to see all of them, and then I can say, well, there's the exact amount. I don't have to add anything up. I don't have to do anything funny. This doesn't do any transaction. Nothing new happens because it's already in the checking account, but it does help us with the reconciling process, reconciling our books to what has cleared the bank account. So it'll make the reconciliation at the end of the month easier to do because I'm basically we're doing it as we go. So I'll say, okay, and then if I go back to the balance sheet, So now nothing new has happened here, but if I go back into that detailed report, nothing new happened in terms of journal entries. Something new happened in that it has this new little symbol here, meaning it has now cleared the bank. So when you reconcile, when you do the reconciliation process, it will already be checked off as telling you, look, this already basically cleared the bank because you tied it out. You used it to match the bank.